Welcome to another episode of Zebec's Future of Money. Today on the show, I'm joined by one of the largest spaces in fintech compliance, Nick Andrews. He is the Managing Director of Compliance at Zebec. He is also the co-founder of Strata Global and the Group Head of Compliance at the Alternative Derivatives Exchange. Nick's background includes deep involvement in enterprise SaaS, core banking transformation, and regulatory fintech. He contributes high-level insight into compliance bridging, global deployment protocols, and scaling enterprise-grade infrastructure across geographies. Today, we'll be talking about all things compliance and regulation as we navigate the ever-changing world of crypto and blockchain. Tune in to hear Nick's experience in compliance, the regulatory landscape in crypto, how Gatenox integrates seamlessly with Zebec's core products, and why Nick decided to join Zebec. Nick, it's great to have you on.
Well, thank you for having me on.
So maybe the audience would like to learn a little bit more about you. Could you also walk us through your journey in the compliance and regulatory space?
Well, I've been around the financial services for a very long time. I'm not actually on the picture, so you can actually see how old I am, and you can probably guess it is a very long time. But I started my career in the financial services in the banking side. I ended my banking career as the head of credit risk management in a bank, which was an interesting place to be in the derivative and the commercial banking side. I moved to the capital markets, where I've always been on the risk side. I've never been a trader, and that's why I ended up continuing in the risk and the compliance side. So like my time in the capital markets, I didn't quite realize that time became so useful later in life as to some of the things that I've been getting up to. So from that point of view, I've been on the fixed income floor. When it was called junk bonds, I looked after the credit and all the risks in that side. We did quite well, I hasten to add. I've been on the equity floor, been on the derivative clearing floor. I've been in a very innovative securities firm many years ago, where I was at board level, and we were the firm that brought ETFs to the UK and then into Europe. That was a very interesting time for innovation in these sorts of things. And I think if we think back to it, the ETFs were the first new product for quite a long time that came to the financial services sector. So you learn a lot from those sorts of things. However, after a period there, I set up my own compliance and regulatory consultancy. Compliance had then become more of an industry to where it had started out really post Big Bang 1986 here in the UK, and then with a little bit more bite to it in the 90s. And it also brought in financial crime with the laws that came in 92, 94 here in the UK. So compliance and financial crime sort of merge into one. They're very distinct pieces, but from my point of view, I've covered both parts and continue to cover both parts. So my compliance consultancy allowed us to be very flexible over things. We set companies up, we looked after companies from a compliance point of view and take a pragmatic view on these things. So we saw an awful lot of innovation that came to the UK, got it going, managed it on an ongoing basis, and actually had a bit of fun. There's something you don't hear very often. People in compliance say they have a bit of fun, but it can be good fun, can be very interesting. So that compliance consultancy, I sold it just before COVID hit big time, but I had a ball towards the latter part. I was fortunate enough to become an independent non-executive director at a large daughter company of a large American bank. That was always interesting to see governance applied from compliance. I say that from the point of view of when we talk about governance, it was interesting that a compliance bod was actually on the board of a company. You don't see that very often. Might refer to that a little bit later on, depending on what you ask me about, Pav. Also in that time, I sold another company to a well-known crypto firm. I was also on the board of another well-known retail crypto firm as a non-executive director. And I'd also set up a Bitcoin lending company out of the US with some friends of mine, but we couldn't quite get that one off the ground due to funding. So my point there being is I've been involved in the crypto and digital asset space for 10, nearly 15 years now. So I do know my way through that from a compliance point of view, from the hard edge of innovation, of setting up companies and running companies in that space. So I take that for that point of view, but I'm actually speaking to you from another entity that I am the co-founder of, which is a regulated firm here in the UK, which is Strata Global. I'm part of that, but I'm also part of Zebec, which is where I'm joining as well, which was what you said there at the time. My regulated firm concentrates in the digital assets, so I know my way around that. So that's a very long piece. I hope that gives you an introduction and you can understand a little bit about how I've come to where I am.
Yeah, absolutely. So it sounds like you've had a pretty expansive experience in the Web 2 and Web 3 world. That sort of depth of experience is what makes you so valuable here at Zebec, especially when we're at the intersection of payroll and payments. It requires somebody who truly understands both the regulatory framework and the nuances of financial operations. So having someone with their background definitely ensures it can scale while staying ahead of compliance expectations. And you mentioned a few of your experiences. Looking back at your career, having been in Web 2 and Web 3, what have been the most challenging compliance issues you faced to date?
I'll start that one off with a non-answer, if I may, which is a big question. My non-answer is, in my life, both in the bank, the capital markets, and more personally in the compliance consultancy, I've come across some interesting characters that you bump into who want to get a regulatory license here in the UK. And unfortunately, a number of them have been bordering on the criminal, if not criminals. And that always makes those positions somewhat challenging as you work out who on earth they are. But it makes for a good story, but that's not what we're here to talk about. It's quite entertaining. We can do another podcast on the horrors that we actually find. Again, I refer to that. Sometimes compliance is interesting, even though you don't want it to be interesting. But coming back to your point, what am I really looking at? The most challenging compliance issues is bad regulation or poor regulation. Everybody who wants to play in the financial services area looks for good regulation. Then you know what you're doing. It's when we have these difficult regulations which have been ill thought through. Well, I'm not talking just about here in the UK. I'm talking about Europe and other jurisdictions as well. Poor regulation is dreadful, and that makes the entire position very difficult. But I think the underlying message there, compliance itself is split into two different parts of the activity, one of which is those people who are pragmatic and see their way through a resolution for where the owners of the company, the investors, want to make money, and they want to make money in the compliance way, but they want to make money as quickly as they can. Talking about fintech, particularly in the crypto sectors, there's usually a way around some of these sorts of things in a correct way, rather than just saying no to everything. Business prevention officers are the bane of my life in compliance. Actually, I say that. I made a lot of money in a compliance consultancy by not being a business prevention officer, and compliance people having to come to me to say, how can we sort this one through in this pragmatic way? So I think that there's always other pieces I can talk about challenging, but I think those are the biggest pieces, is to make sure that compliance is considered. It's not a profit center, but it should be contributing to the profit center. And I think that is where the attitudes at boards and other people is, it's a tick box point. It's easy to do. We don't need to do much. Just tick these boxes, get on with it. That's the most challenging point, to convert them, is to do it properly and don't go to prison.
Okay, that makes sense. So you mentioned, I guess, the main issue is unclear regulation, especially in the fintech space. So I would argue that every new market and every new use case introduces a different regulatory lens, which is what makes it difficult to stay ahead and ensure that the regulatory framework is clear. So I think another thing I would argue is that I think what makes our industry so tough is that compliance isn't a one-time exercise. It's a continuous battle. It's a living, evolving process. So being able to stay proactive is the key to success. Do you agree?
I'd agree entirely with you on all of those points there. The problems of cross-border, which we can talk about later, I would imagine. I've been brought up here in the UK with our regulatory regime, which is a principles-based regulator, which allows some sort of risk assessments and a little bit of flexibility around the edges without having a hard and fast rule. Unlike the US model, where there are very specific rules that come out from it, Europe is much more rules-based as well. Try and manage those different complexities between a global company which has a US head office perhaps doing business in Europe and in the UK, and we're trying to apply principles-based regulations to this. That makes it harder. But coming back to your point, what the problem we have with some of these new regulations is speed. In previous years, it almost looks like it's every 10 years there is a big jump in compliance and attitudes, although that period might be blended over the 10-year decade period, for want of a better term. But it used to be new rules would be coming out and the industry was quite pragmatic in implementing those rules, i.e. takes its time. But now in the crypto and fintech you can apply depending on which underlying activity it's doing. We want to move much more quickly to be able to build our businesses, to make revenues, to expand, etc. And the rules don't move as quickly as we want. And that could be the position of having that flexibility at a principles-based regulation compared to a rules-based regulation may help. It's not necessarily the answer to everything.
Yeah, so you mentioned, and it sounds like you've been part of the conversations in the UK around regulation for a while. How have you seen the compliance landscape evolve in the last 5 to 10 years, particularly for fintech and digital assets?
Yeah, I think the problem is there is a shortage of knowledge in this space, and compare it perhaps to a supermarket, where a supermarket will say, we can do everything. And might be able to do everything, but you don't do one thing particularly well. And that's what you expect of a supermarket. People assume that when they are looking at compliance in this new world, that a compliance person will know everything about a very expensive subject matter and should be an expert on it, be able to deliver that. The other problem, and I referred to this a little bit earlier, is that 70% of compliance officers in the UK are business prevention officers. It's easier to not take any risks than it is to damage your future career or bonus or whatever it is that's your driver. The other 30% of the pragmatic ones who actually will say they don't necessarily understand this need to go off and work it out and be able to do that. So that admittance of don't really know is very powerful for the board of directors and the investors in these firms, because it's actually saying this is a really knotty particular position where there aren't any rules. There might be guidance. What would the regulator think about this? How are we going to get this launched in the correct way? So I think that's one of those things. The evolution over the past 5 to 10 years has been extraordinarily quick. BTC itself has become mainstream. 10 years ago, regulators were touting it as criminal. You weren't allowed to touch it. Now look at what it's doing. There is still that lag as to attitudes of what is it for, but the industry is working these sorts of things out pretty rapidly. So the underlying technology that crypto firms have brought to the market are the things that are really changing the compliance landscape and overall the entire financial services landscape. Having the digital technology to power exchanges as an example, just look and see how much the big boy exchanges are ploughing into creating and understanding how a digital exchange works. And you can see the horrors that come to a compliance department if they've never been exposed to this sort of thing, or a compliance officer in that particular case. And I think the other challenges that we have, large firms themselves, I'm not going to name some here, but there's been enough in the press just recently, do not innovate necessarily. They tend to acquire once a fintech has got to a certain size. So I don't think that some of the things that we're seeing in the market, for example, AI itself, is achieving much. That's not quite true. I come to that. The AI agents, which nip around the edges and take out certain mundane tasks, particularly in the AML, KYC sector, particularly in the comparison of various parts of the mundane work, great. That will be coming in and that will be taking over, as I said, those mundane tasks, which when you have humans doing it and it's mundane, there's vast amounts of data, mistakes are made and they can't do it all day, day in, day out. And one of those areas I look at is in the financial crime space, particularly regarding market abuse and various other criminal activities such as those. ChatGPT and Grok and Gemini, I'm seeing those being used much more often in firms as an aid, but not a be-all and end-all. And that is either good, but it can also be bad. I've seen a number of these sort of things used as complaints. So somebody just puts something in and it spills out complete nonsense to make a complaint to a regulated firm, which takes a while to untangle, but costs a lot of money to respond to those. And often I wonder what she does to the algorithms of these things. So I think the compliance landscape is changing rapidly. It's reinventing internally, but it's the same sort of work being done in a different, hopefully much more efficient way.
That's very insightful. So one of the things I would like to further touch upon is, one, we've seen the AI boom in the last couple of years, and now we're more recently seeing, I guess, what we can call the crypto boom. But I think a third quote unquote boom that has emerged is the intersection of both. We've seen a lot of crypto projects adopt AI into their core products. And even at Zebec, that's something we've done. We've positioned ourselves as an AI-based PayFi and RWA project. And we're seeing that's become the trend in the crypto space. So from a regulatory and technological standpoint, do you think the intersection of crypto and AI and just technology in general is the future of the crypto and fintech industry? And if so, what regulatory or technology trends do you think will have the biggest impact on compliance in that space in the next few years?
I think you are right on those pieces. A traditional firm has got ancient history technology there, particularly the banking sector. There's a couple of banks here which are relatively modern. Their technology is probably 5, 10 years old. It is light years ahead of the incumbents, and I'm going to suggest that's probably exactly the same in most other jurisdictions as well. So for the traditional firms to actually change their technology can only happen around the edges, in the same way as we saw the payment firms here in the UK in the past 15 years, full fat margin in the main banks, nibble that away with their new innovative products and technologies and have to make the big boys change the way that they do business. They still have a large incumbent client base, but there's enough room for the smaller firms to make money. I come slightly off tack there, but it's the same sort of things that I'm seeing here. The technology is being implemented in new companies, Zebec predominantly, as that's where I am at the moment, and in other firms which are new, coming up, changing the way that we actually trade. For example, the New York Stock Exchange has just moved to T+1 from T+2 in its settlement period. The crypto firms are settling much, much quicker than that because of the underlying technology. Do we, as users of stock exchanges, going to be demanding quicker settlement in the future? It will come. So we will see two streams, one of which would be the new startups and the ones that have been around for a period with the modern technology that they can pull out the bits that are slowing up their stream of work because it's all modular, throw that away and re-implement that. Whereas that's so much harder to do in a traditional firm. You pull out one bit and it's like an inverted pyramid. It all collapses around you. I dread to think the age of some of the, is it Cobalt Blue, which is the core system with inside banking? I think that's a pretty old piece of system, and I think any of those developers are now long gone. Apologies if any of them are still around at the moment. So I do see that the compliance landscape will change rapidly as to the adaptation. Using that example of T+1 for the New York Stock Exchange versus some of the other exchanges that are up and coming, which are trading at T+15 minutes. How are we in the compliance function going to be able to manage that? Well, we'll manage it because we can allow the systems to build better tools to be able to look at this vast amount of data and manage those patterns far better than the old way in the traditional banks.
So, Nick, how do you see the global regulatory alignment or fragmentation affecting companies operating in multiple jurisdictions? So as we've seen, a lot of crypto companies operate across multiple countries when it comes to, say, cross-border remittances. So how do you think this affects these crypto companies?
The whole point in your question there is one of nationalism. I mean that in the polite way, that no country wants to give up its regulatory control over the financial services sector and the delivery of financial products into its own population to another country. It hasn't worked necessarily in Europe. There are certain things that you can do across border, but each country needs to be able to manage and protect its population. The US is a barrier. The easy answer in compliance terms for any non-US company to go and offer services in the US is just don't go there. It's too difficult. That's not a particularly good compliance answer, but that is not going to change just because of the underlying technology in these particular pieces. So how do I see the global regulatory alignment? It takes forever to do these global changes that could affect different countries to give certain minimum rules. We've had the capital requirements, we've had GDPR, that's hardly global and causes all manner of frictions between various US, Europe, UK, all of these different pieces. So I don't see in the short, medium, and if I define long-term as 20 to 30, 40 years, I don't see much regulatory alignment in some of these areas. So the unfortunate part for the crypto firms, the fintech firms, financial firms as a general term, to be able to simply offer products in different jurisdictions without having to consider what happens in that jurisdiction, and they have to abide by those rules as changing any time soon. I'll be long retired in 20 or 30 years' time, so I will be delighted to eat my hat if that is changed and I'm still alive. But I don't actually see that coming down the line. I wonder also about the big tech changes that enable that for some of these firms to be able to operate in these countries. We look at cyber threats to an entity that is delivering into a European country and it gets hacked there, but it's based out of its head offices somewhere else. How's all this going to get resolved? Bigger minds than I will consider all of these sorts of things and hopefully can be worked out one day, but it's going to be a long journey. And ultimately, it comes down to where's the money? How am I going to make money by operating in that country and doing this? Where are the countries going to get their tax take from? That's what will drive some of these things. How can we work these sorts of things out? I think it's going to be very slow. It's going to be cumbersome. Nobody wants to give up control of their own borders in this respect. So it's going to be a tough one. We will see some bits being picked off. AML is a prime example. What do we look at? And there's some nonsensical stuff about AML as well, which just makes me frustrated about the way these things work. But that's one of those things. Do we have a standardization across US, UK, and Europe? In theory, we do. In practice, we don't. The term equivalence comes into play for us. That's us in the financial crime world, the compliance world, between the US, Europe, and UK, where we can rely on equivalence of the regulatory regime and the legal structure behind it to support it. Does it actually work? Why don't these firms use equivalence to do due diligence? Because they don't believe in equivalence. And that comes down to their risk-based approach. So certain countries have weaker laws in financial crime and AML. Some of them don't even bother doing the proper things that are apparently equivalent to the way that we do them in the UK or in some of the European jurisdictions. And when there are gaps, the regulators are in and you get fined. So guess what? We're not going to do it. So equivalence doesn't really work in those things. I go down a very specific piece, but it does bear a relevance to Zebec and Gatenox.
No, I completely agree. That's a huge point for us at Zebec. So because operating globally, especially when it comes to payroll, operating in every country adds a new layer of complexity, and this fragmentation can easily slow down innovation if you're not proactive in the space. So with Gatenox, the sort of approach we took is twofold. One, the acquisition of Gatenox, which allows us to onboard and verify individuals across jurisdictions while also maintaining a unified compliance network. So what we're able to do is remain compliant in every region we operate in while also offering the best-in-class stablecoin payroll services. And the second approach we take is, as you know, we're actually pursuing MiCA compliance in the EU and FCA registration in the UK. What this allows us to do is position us to operate in some of these more regulated or higher regulated markets like the UK and the EU. And I think this combination between the acquisition of Gatenox and pursuing compliance in regions that you heavily operate in is what allows for more regulatory engagement and maybe I'd call it scalable compliance infrastructure. So this allows us to serve multinational clients without taking shortcuts and having a more proactive approach to what might be changing regulation in the next 1, 3, 5, 10, 15 years maybe.
Yeah, I think your point is well made, and turn that into that simple subject of KYC, KYB, and AML checks. Simple subject. So taking the view of do the best in class for each of those jurisdictions, i.e. go for the highest level possible. If you've got the highest level, then you've already got it for the ones who don't require those certain parts in the other jurisdictions. So in theory, although it might be unpalatable for the board up front to say, look, we're going to get 6 bits of data or whatever else it may be to be able to identify this person, but we can use that across all these other jurisdictions. We don't have to go and replicate that again. That is a nightmare for your client journey, and it's a nightmare for the firm to be able to maintain all of this sort of stuff. So having that one gold standard can work in certain parts, the regulatory compliance AML space. As just one.
No, that's a good point. I completely agree. Yeah. So you mentioned Gatenox and also KYB, KYC, and AML. Maybe for those unfamiliar, can you explain what Gatenox does and the problem it solves in compliance?
Gatenox took a very different view for how to do KYC, KYB, the AML checks, whatever we want to call it. It's the onboarding part for the financial services, an entrance point into taking products or advice from a financial services firm. The people behind it came from block analytic firm. So they had a different way of thinking about the technology and how that can be managed. And if they were thinking about what I was saying earlier, do it to the gold standard, and therefore it works all around that particular space. Their objective is that ideally, and now I might argue a little bit against myself for one of my comments a little bit earlier. So you have all of these different divisions or different parts of a traditional bank that you want to get these services from. You have to provide all of this KYC time and again. You get frustrated. Why is that? It's because they have different systems for different products in different parts of their business which don't speak to each other. Welcome aboard to Gatenox and its equivalents. This is the new world where we should be able to just go into whichever bank it is and say, here we go, you've already got it. And this is my data that I own. You can have a look at it. Open me up. Should be a lot quicker, a lot easier, far more efficient for a bank. Dare I say it, the number of fines that the regulator imposes here in the UK on large firms not having the requisite KYC information is probably somewhere in the depths of that firm that they just can't find it because it's in a different division in a different part of the country. So it's easier to pay the fine than it is to dig all this information out. But they go and redo it all over again. It's dreadful time. So it's all very defensive compliance and not good business practices. So I see Gatenox as a potential solution for this.
Yeah, so it sounds like Gatenox provides a centralized compliance platform where you can automate these menial tasks that you mentioned earlier. So basically just more communication between business lines, not having to redo KYC, the AML, and just streamline the process faster. So it can be applied to use cases like payroll or payments where you can scale it to enterprises, corporate clients, and global workforces.
Exactly. Quite agree.
So then I guess moving on to how this can be applied, how exactly does Gatenox's technology integrate with Zebec to enhance institutional adoption? I know we talked about having that centralized platform and being able to automate these end-to-end onboarding and identity verification and AML checks, but do you think there are any other integrations or any other features that this integration with Zebec allows in terms of institutional adoption?
The answer to that is both Zebec-wise and Zebec's future strategy of additional business lines that it can provide, and also, it should give Zebec the margin efficiency for onboarding underlying clients in the payroll business, let alone any other future businesses they have. Give you an example. Not that long ago, to KYC and onboard a client here in the UK for the retail derivatives side, together with the marketing, was about $800. That was 15 years ago. Now, that figure, or about 5 years ago, that was down to sub $50. With something like Gatenox, in theory, for the mainstream clients, and I'm talking there where there are databases available to be able to interrogate them, so it'll be difficult in some jurisdictions, but in the major jurisdictions, US, UK, Europe, Switzerland, these databases are available, other countries as well. This should just bring those costs down. And if it brings costs down, it makes it a lot more efficient efficient for a firm. It makes it much more efficient for the individuals to be able to access additional services from Zebec or other firms which are offering services to them as well. So I see that there is a significant advantage to integrating this. I like the technology. I've used it in its previous incarnation, and it works. Certainly for the corporate side, it was providing a far better service than its competitors, and it was much more easy to access and display. Ease of all of this makes cost efficiencies in compliance departments, and I like cost efficiencies. I like quality, actually, but that's the right way of saying it.
From what we've discussed and from what I know about compliance and regulation, sometimes innovation can be seen as a risk when it's applied to compliance or regulatory frameworks. But I think in this case, Gatenox's technology actually turns innovation into a competitive advantage instead of a risk because of this use case that it has from being fully compliant and being able to automate onboarding and KYB and KYC and AML. Would you agree?
Yeah, don't forget, everything within a regulated firm is a risk. And it's incumbent on the firm to understand what those risks are and mitigate. If they can't mitigate them, they may have to put capital to one side for them. Or if they can't mitigate the risks, then they either accept the risk as it is, and therefore you monitor it to greater effects to make sure it's not crossing over the line or to wherever your line has been drawn, or you just don't do it.
So, Nick, what role are you playing in helping Zebec navigate the regulatory and compliance aspect of its businesses? I know I mentioned MICA in the EU and FCA in the UK and the acquisition of Gatenox, but maybe you can provide some more color on your role and the role you play in helping us navigate the space.
Where I see that role is much more from how do we ensure that Zebec is operating both internally in a compliant fashion, which means it is managing its business pragmatically and correctly, and also what does it look like to the investors and external participants towards Zebec? How do we know it's being managed correctly and it's not running faster than it can actually walk, if that is an expression? So that starts to make sure that the governance at the very top works. What I don't believe is over-engineering things for the sake of engineering things and ticking boxes. It's focus on the risks, make sure that the governance works at the top, make sure that the board receive the right information so they can manage their business in both compliance and financial crime and the other risks that are going on within the firm. And therefore, that should have what we call in the UK the tone from the top, so that there is no excuses. The board knows what it's doing. It is delivering the investors' money into the strategy in the most efficient way, and it's being conducted in a compliant way. So that allows for generally greater acceptance by clients that this is a proper firm doing the right thing. The other parts that we need to do is to make sure that the products, the activities are conducted in a compliant way. That actually means certain policies and processes are put into place to be able to manage certain things. And I repeat again, there are all risks that are within the firm, and we just need to understand what those risks are and apply some mitigants or not do those certain things. So that comes down to things like financial promotions. We've talked about financial crime. We need to consider whether the product meets its requirements for the underlying users. And we do all of those sorts of things. At the end of the day, that allows the investors to be happy that this business can grow quickly and compliantly. So it's a far better investment than a cowboy shop who can build a business very quickly and promise everything and not do anything and tends to fail or get fined. So it would give clients, everybody, comfort that it's regulated and managed correctly. It would give the auditors comfort that the board are actually in control and know what's going on in the finances. It covers all of those sorts of risks that are there. But I come back to one of the key things that I think I've probably mentioned a number of times here, which is cost effectiveness in some of these things. We really need to make sure that we provide cost-effective and compliant activities within the firm. That doesn't mean we cut compliance out completely. It means we apply it correctly, but also being able to say to the board, you shouldn't be doing that. That's not going to happen in this strategy because that will take us into unknown areas that we do not want to be in. And that is a difficult piece. So there's an awful lot to this. And I see that the compliance function will be, in essence, the equivalent of a profit center, not a cost center, on the basis of if we do this properly, if we create the correct infrastructure to be able to launch all of these things in an efficient timescale, not only will it be a lot more of an interesting firm and you get better quality people wanting to come and work for a better quality firm, but the evidence of quality, pragmatic, efficient compliance is in the quality of the clients and the revenues that start to come in. Nobody wants to give their money to a bucket shop, shall I say. If they do, they tend to lose it. So that's what I believe. That's what we want to be able to deliver.
Awesome. Nick, it was an absolute pleasure having you on our Future Money episode. Your insights into the evolving compliance landscape really show why the compliance and regulatory side of the business is so critical, especially as we build the future of real-time programmable payments and payroll at Zebec. And now that we have Gatenox part of our ecosystem, we're not just able to move money faster, we're doing it with the highest standards of global compliance, from KYC, KYB, and AML to our path towards MiCA and FCA alignment. So we're extremely excited to have you on our team and lead us on this regulatory and compliance initiative.
Thank you for having me on this podcast and to being on your team.
Absolutely. Thank you, everyone.
All the best. Thank you.